when markets around the world are awaiting big news, they often go to a point of resistance or a point of support ahead of that information. Are we seeing that happen right now in the markets? Stay tuned to find out more. Okay, guys, well, as we like to do, let's begin our recap of the market's close 10th of August 2021. Of course, our looks for the next couple of days ahead and weeks ahead, if not months ahead in the markets. One of the best places to start is always going to be the heat map of the S&P 500 to understand the stock market movements anyway, as remember, all these markets are interconnected. So yesterday we had the banks move up pretty heavily. We also had a big movement here in the travel stocks, or at least a beginning of movements there. That's the first signs of life in quite some time that we've got out of that sector. Industrials, Pfizer, Walmart, some things were going well, but overall the tech was down. Of course, tech was the one that was getting hit up. Why? Because we alluded to the 10-year being the most important chart for us to look at this week, and it has been rampaging. It's been going up and up and up the first two trade days of the week, and that's causing some weakness through the Nasdaq, and of course strength through banks, through energy, through other sectors, and that's leading to S&P 500, IWM, which is the Russell 2000, and the Dow Jones going up. You'll notice over here, energy, materials, XLF, which is financials, all good. And then, of course, biotech, semiconductors, all of this other stuff, healthcare, etc., on the low in terms of movements. Is this unusual for the time of year? So I don't believe it is. I believe we're kind of going into that tippity top for tech and a little bit of a maybe movement down here, or at least sideways action. There are some reasons why. One of them is that August and September, specifically September, tend to be weakness just across the board in the market. We've also got 20 years of Nasdaq results here, and as I keep bringing up, August and September just tend to be lackluster on returns. Does that mean you need to be scared as a long-term investor? No. I mean, 1.3% down on average over the month of September is nothing to really be scared about over the long-term bull cycle, but it certainly is something that you pay attention to when you're a trader. It's that kind of actionable data that you want to bring in to your analysis. So we're still in earnings season. We're still having some large companies coming out with big earnings. We've of course got eBay on the Wednesday close, Neo as well, and Clover and a few others that people are looking at right now. We've just had Coinbase. We've just had this week AMC. We've had the Trade Desk and a few others. I'm sure many viewers out there's a few Palantir fans. Put your comments down below, guys, if you're a Palantir fan. We've got that Thursday before the open. Baidu, Disney as well, and Airbnb. I'll be very interested to see how Airbnb performs. This is one that could be a sleeper hit, and time will tell, but oh, that's going to be very, very interesting. DoorDash as well should be an interesting stock to look at. Let's get into the technical analysis straight away now and talk about markets reaching tippity tops or the bottoms before earnings or before key economic data. And here we have the dollar index. You'll notice it's coming straight into previous resistances, and this is a critical point for it. We've got CPI data coming out in the US on the Wednesday morning before the market open, and I expect that to either shoot through this resistance or of course reject and go back down. But this is what you generally have before an earnings release on a stock, before commodities, like big kind of economic news to do with the country comes out. This is the type of level that we generally reach. The US 10-year is also going to be quite susceptible to this, so take care of on this one. And we have, of course, the double bottom in play right now with the US 10-year. We're expecting further strength. We got our confirmation yesterday that led on with further strength in the US 10-year, leading to weakness in the Nasdaq, as we explained. And we're at kind of like the first problem zone. We've noticed that previously the resistance was too much here at the 50 exponential. We just reached that. Can we push through? CPI data will be the key here to whether the US 10-year continues to rise. And if it does, that's going to be good for certain sectors and most likely bad for the Nasdaq, at least in the short term. Another thing that's bad for is TLT. The 20-year bonds continue to slide after they got through our beautiful trend line and 20 moving average. Look, we suspected this. We're coming down to the 146, which is the critical resistance support line ahead of the CPI data. No surprise why we're going to be around here. And the CPI data will move this particular bond. And the question is, will it hold or will it continue to go down? We'll find out over the next 24 hours. Your guess is as good as mine on that one. Remember, slightly bad news And a hit news is generally good for the economy because overall it means the Fed will most likely keep the nice stimulus package kind of rolling through. But if it's a really good news or a really bad miss, I think both of those are kind of negative towards the markets at this stage. We go over to gold. Long leg doji formed on the daily. Clearly no direction here on gold or silver yet, other than it did get that flash crash through it. I think this is a bit of a tough market at this stage, and we have to kind of stay clear of it until we get more structural formation. We move over to Tesla. Look, we're still covering Tesla on the daily here on the channel, so if you're interested in that, definitely follow us. But at this stage, we're stuck between a range. We've got 727 and we've got the 697 as the support. So we've got the resistance, we have the support, we have the 20 moving average on the 4 hour. We have some good buying that goes on in the morning and then it kind of weakens throughout the day. I wouldn't say overall I'm loving what I'm seeing on Tesla, but it all comes down to volume. Look at the options. That's going to be a big thing. And if it does break either side and close above or below, expect quite a lot of volatility to come into this one. Now, speaking of volatility, I don't often bring up this chart. It's one of the actionable bits of data that I do use quite a lot. And it's basically, it looks like little squiggly worms. It's kind of like if you had a Nokia during the 90s, might be showing my age here, and you played Snake on that Nokia. Shout out to anyone that had the Nokia in the comments. I want to know which Nokia you guys had. I think I had the 3300 or 3200 or something like that. But anyway, this is basically showing us rotation through. And I just wanted to highlight this for one reason. That is that the technology sector here has been rising. And you'll notice it's in the leading area. Now, what tends to happen is the snake kind of goes leading and then it starts to rotate round, goes into weakening, and then it comes back round, goes like this. And effectively, this is kind of like what Wall Street's doing, and you can bring this together with your technical analysis. But it makes sense at this time of year that tech was leading in, and now we usually start to see the snake turn around and go into the weakening sector. So we'll be watching this over the next coming weeks as well. It's an important chart to have on your charts if possible. We've got IWM, the Russell 2000, to start our indices discussion, and straight away when you look at this, you would know that nothing's happening. It's coiling and it is moving very slowly here, considering it's the Russell 2000. Very lackluster ahead of CPI data. I feel like this data is going to start some fireworks. Like it didn't start with non-farms, so why not with CPI? We've got little bits of resistance here where sellers have come in. If we get a closure above this, I would have no hesitation in thinking that that's a big technical move, and a closure above here should lead into further rally for the for the IWM. And if it does get underneath, I mean, yes, okay, we could go back down to the 208 area. This is a critical little coily zone, but the bull side, that would be pretty fascinating if it did occur. Speaking of interesting zones, what's going on with QQQ, guys? The Nasdaq. Does it get any more annoying than this? You've got long leg doji with, of course, the high and the low. Then you have another indecision candle over here. And then you have this bearish looking candle that didn't actually close properly underneath the last low. So see how it got underneath? It closed right where it was. So it doesn't give us a clear signal. It's like the market is stuffing with us right now. And they're like, you know what? We know you're looking at these candles, guys. We know where the close confirmations are. And guess what? We're going to put it at the critical support right ahead of the big bit of news, just so you have absolutely no idea what we're thinking. That is exactly how I feel about this QQQ right now. Really, I mean, if it gets underneath here today due to CPI, you would think it goes to the 364. There will be some buys, you would assume, around this level. And if it gets underneath the 20, I could see it going back to the 50 exponential. So this closure under here would be very significant. A big move down to around that 355 on the QQQ would be in order at that stage. And of course, any breakout above this zone, well, we continue to go up, and we'll talk about that if it does occur. US 30, the Dow Jones, what's it doing? Well, it had some strength. I'm not really trusting this chart too much at the moment because of the tight range that it's in. It's strengthening due to the banks and the US 10-year. Does it look great? I mean, you look at it on something like a weekly, it's barely going stronger. I mean, it always pays to be an optimist in the markets, but that's barely going stronger here. So Dow not showing us enough at this stage. Even the S&P 500, it looked like it was doing glorious things, and then by the end of the day, comes straight back in underneath those previous kind of highs. We're sitting here at the time of the recording at around, what's the price? 44.35. So really very little direction coming in ahead of the CPI. And again, it's a wait and see type of event there. Now, where it's been much better has been the crypto market. The crypto market's been phenomenal. You'll notice here it's found a little bit of a tippity top, it looks like, on Ethereum. We have the 8-hour 20 that's been quite a large, nice bounce zone. We've also got like a doubling top here where we have a resistance and we have a whole bunch of indecision candles forming all over the place. If you actually go back over to the daily on Ethereum, you'll notice it's created the long leg doji here. And of course, a closure underneath this, we'd expect it to go back down to previous resistance, become support, and a closure above this, we'd expect further rally here on Ethereum. And the next zone, I guess, would be around that 30, probably about 3,500, because the previous support's becoming resistance, closure above, you would think 3,500's in order. Exciting times here in the crypto market. It's probably the better market that's been showing for the last couple of weeks. Even BTC is trying to hold itself above this kind of 45,000 zone. You can see the price action here. But yeah, it's still all about probably the CPI, even for these markets. It shouldn't affect it, but I do think that this is going to cause some problems. If you do get a trough forming underneath here, expect a sell-off on BTC. So if you get underneath, what is this price? Around 44,600. You expect then a further sell-off back down into the 43K support. So I'd watch out for that. That would basically be like a peak, trough, lower peak kind of scenario on some of the time frames. And that would be something I'm looking at. But overall, it's all about CPI. We'll come back at you live, of course, with a literal CPI review today before the market opens. So as soon as the market opens, we'll be live streaming 1 hour before. I'll probably start slightly earlier so we can pick up on the CPI data, and then we'll go through it and we'll find out what direction does the market want to go tomorrow. And it's going to be a lot of fun to check out. Another thing that's interesting in the markets at the moment is all these retail stocks that were really hot. So things like Beyond that were running heavily, things like Moderna that were running heavily. Some of them have started to show a little bit of cracks yesterday. We saw some pullbacks here, nowhere near the rallies that they've been having. But will this sell-off continue? I mean, AMD, just to, if anyone is still covering it, I mean, that's now well back down from where it was when it was above 120. I think it's around 106 at this stage. So some big moves, and it just shows you how fast and nimble you've got to be in the markets. Speaking of the CPI, just remember 8:30 a.m. Eastern time in America. That's New York time for anyone that doesn't know. And it is 1 hour before the market opens. So we're going to see core CPI and CPI data. Usually I don't pay that much attention to it, but recently, in recent months, this has become one of the hot bits of news that we need to check. So I'm excited. Are you guys excited? Will we get direction? The only thing we've been able to do this week is really look at the US 10-year and follow the 10 years stocks. They're the ones that have been doing the best. So good luck to everybody out there. Thanks very much for subscribing. And of course, like the video if you do enjoy it. I'm interested to see the Nokias in the comments down below. So definitely check those ones through. Or if you had some other phone, let us know. And we'll catch you in the next video, guys. Bye for now.